Yeah, so Iain, when are you expecting the first cut from the Fed?
I think you've got to be anticipating it for September now. And I think, to Kristine's point, what the Fed need to do is they need to get ahead of this narrative.
Yeah.
So they've taken rates into restrictive territory. They know they're restrictive. Jerome Powell's been very clear about that. Inflation is now behaving. We'll find out on Thursday if it's going to continue to behave. But what market forecasts are is that, Q1 was a bump from an inflation standpoint. We're now back on track to have inflation coming down. If that's the case, they can react and hopefully get in front of this possible weakness in the jobs market.
So I was in Sintra at the ECB forum where there was Jay Powell, a number of other, of course, Mr. Goolsbee as well. And there was a concern that actually inflation picks back up, which is why the narrative, frankly, which was not concerted but felt like from all the major central bankers was, look, let's wait until we have more data. Is it counterintuitive, and does that risk actually creating more problems if they wait too long?
It does. I guess they're still living in the fear that they repeat some of the previous mistakes of previous central bankers,
so
where
cut
they don't
and then
get
have to hike.
Yeah, they don't get it under control. But if you actually take a step back and say we had particularly weak inflation in Q4, we then went accelerated again in Q1, we've come back down again in Q2. Let's just smooth that out. The trend is definitely down. I think there's definitely clear evidence when you look at wages, when you look at other measures, some of the survey data. Prices are falling, inflation's coming down, and it's no good waiting to 2% to start acting. You need to wait before that. And I think a combination of the inflation data we're seeing today, plus the jobs data that seems to be coming out a bit softer, should give them and should embolden them to get moving.
I mean, there's also belief, I think, in the markets, or when you speak to market chief executives, that as soon as the Fed cuts, something unlocks. That it's like the animal spirits, that M&A is coming back, that IPOs are back. Is that far-fetched?
Well, Fred, I mean, I guess it really depends, right? If we are kind of, again, going back to that soft landing scenario, then, it could possibly kind of create this animal spirit sort of environment and would give, again, the S&P 500 more momentum to reach yet another record high. And that's certainly the hope amongst the markets. But, it really just depends on, the reason behind a likely Fed rate cut. Is it because they're trying to kind of engineer just a gradual slowing of the economy, or are they cutting because they see something more worrying that perhaps we among as market participants and observers not necessarily in tune to? And that's, I think, what is going to be important from comments from Powell today and in the subsequent weeks and months. That's really what we're going to be looking out for, is that, are we headed for something more of a gradual slowdown, or is there something worrying that the Fed is looking at the moment?
Yeah, you're definitely expecting a more dovish Powell in his testimony?
Yeah, I think so. I think the data is basically pointing towards that. I think the concern would be that everyone seems to be expecting a dovish Powell in his testimony. So maybe we need to think of that. I think to the point of the cuts, though, and from kind of an activity standpoint, I think they need to be doing more than 25 basis points, though. I don't think just doing the 25 and maybe another 25 and sort of alluding to doing a little bit more is going to help. I do think you need to have that view from a market standpoint that it's more of a cycle and we're going to see rates don't necessarily need to go to zero again, but that we're going to see a gradual path down by 150, 200 basis points. I think that's what the market would really like to get a comfort around, I guess, from the Fed.